Hi and welcome to a weekly outlook. Apologies for not having one last week. I did think about it later in the week, but anyway, here we are. We're on Tuesday now. Obviously, yesterday I say obviously, but in the UK here we had a bank holiday just to prove it. Look, it's on the diary, so that meant don't come into work yesterday. Now, what else happened yesterday? Well, we had Trump speak, etc. And what can we do with any of that? Nothing. So let's look at what we could be looking at trading this week. Well, there's consumer confidence coming out today at 3 p.m. US. I don't expect much to happen from that. It generally just is a merest of tiny blips. Canadian data, current account again on Wednesday, not a massive mover at 1:30, so you've got to move right the way through to the afternoon. US prelim GDP. Let's just check where are we now. That will be the first one then, won't it? Let's just check it is the prelim is the first one. No, advance is it? Prelim's the second one. Yeah, like I'd know that. Okay, so I'm less interested in it, but all the same with the GDP with the US, it can vary from reading to reading. So I'd still be the advanced one, as it should be, is the most important. The prelim is slightly less important than the final. Well, the data still changes, but anyway, in this particular case, we'll watch out for that. I'll be watching out for that tomorrow afternoon at 1:30. All the same. The rest of the week, there's nothing here of real great significance. GDP, Canada is a monthly figure. It does give volatility into the Canadian dollar, so that would, if you're trading the Canadian dollar, give you a kicker there, but for all the other pairings, it's got little to be done. No, as I say, just nothing this week in terms of until we've got a bit of inflation data coming in on Friday there, but not a lot to be done on the news front. So let's have a look at the technicals, and why am I on a 60-minute chart? Really, I want to be looking at the weeklies and dailies as it's a weekly outlook. And I'm just going to click on a bit of sentiment, but I need to bring the sentiment into view, and we'll have a discussion about sentiment. And well, there we go. You can see that, okay, I'm sure. Right, so sentiment, what's happening sentiment-wise? Well, this is euro-dollar. There's not a great deal of movement in the numbers there. There's some more shorts coming into play a little bit on the leverage funds, the hedge funds. They seem to be getting even more short. They're almost, they're more than 3 to 1 now. I'll say almost 3 to 1. They're 3 to 1 short at the moment. Big money's still 2 to 1 long. So sounds like the old bookies here. That's where we are there. Funny enough, the retail money, if I can bring this back in, I've got the retail sentiment sitting here, and the retail on the euro dollar is, I don't know, it's 53. It was actually looking at it earlier on. Actually, yeah, I was looking at some other providers here. Euro dollar around about 60%, 61%. And just check on this one as well. It's pushed up on the live open positions on my FX book there. That's 11% of traders are trading it, and it's pushed up to about 67% on the short side now. Okay, so long elsewhere, short on my FX. Okay, so that's where we sit there at the moment. Building short on there as well. So they've been more short than anything else most of last week. They moved retail market. Well, what's the charts telling us? What's this figure? Well, it's broken the trend. It put a bullish weekly pivot swing in there. It's broken the upside. Looks like it could have potential up to the weekly 21 or maybe the weekly 50 at some point. On the shorter term, we've got a weekly pivot below us. There's depending on how you draw your trend lines across which highs here, it's just running into a bit of resistance from the near term price action. But if you start pulling it out in my longer term price action, well, that's already been broken. So at the moment, it looks like it. Bigger picture, it could still be running up there. Whether we'll get a dip into this, well, we'll wait and see. There's no sort of divergences or anything like that sitting on this picture, and as I say, still looks a bit more bullish. It's not to say it won't roll over at some point, but it's erring more bullish than bearish. Big picture. So what are we looking at on the pound? Well, we know that actually the retail traders are pretty bullish on this at the moment. They're probably the only ones that are, when you come and look at what's happening across in the sentiment here on for the commitment of traders, and it's a bearish. It's not quite 2 to 1. No, it's not even nearly 2 to 1. But there's a huge growth in the shorts coming through from the hedge funds, and a bit more short coming in from the bigger money there. Now this could be just to hedge other positions they've got in the markets, but either way, that's looking bearish. As I say, retail market looks bullish. Personally, there's a lot of risk in this market. We know with Brexit going on at the moment, or Brexit going on, this could just chip over at some point. From it may yet run into the weekly 8. May get a squeeze, of course. It's hit the weekly pivot already here. It's sitting there slow at the moment. It's not broken the near-term trend lines that are sitting across here, and it certainly hasn't I don't think it's broken the bigger trend line yet either. So it's the big money thinks it's going to go down. The risk is always sitting there that it could sell off, but the retail market thinks it's going to go pushing upwards. Trend really is down on it, and it could pop, but it's just as likely to drop it, and the risk, as I say, is sits in that pairing. Dollar yen. Well, let's have a look through the different who thinks what. So dollar yen, and the yen positions, well, some more short positions coming into play. Oh, sorry, reduced short positions coming into play here. Reduced long positions on the asset managers positions. They've just sort of switched around a bit, but it's still, when you look at the numbers, it's pretty neutral across these. Slightly a bit more, or slightly less bearish actually from the leverage funds side of things there. It's a bit more neutral come retail. Really don't have too much of an opinion by the looks of things. So where to on it? Well, from a weekly point of view, it's put that nice bullish candle in, a sort of, which looks like we could see in this sort of movement that's been there. We could see a bit of continuation. So look at the dailies, and the dailies, well, just consolidation. Let's not forget there's a weekly pivot just below us, and that may still be a target yet. It might just come over, and that in itself, if you were looking on the long side and a retracement to play the long side, that may give a bit of support. So it's well worth watching for. As I say, they're in this short term. There's certainly a movement. The bigger weekly picture. Let's put that nice. Did I say daily earlier on? But weekly bar in there, which looks rather bullish. So we'll see how that runs. Aussie dollar. Whoops, well, we're switching from weekly at the moment. Let's have a look at sentiment on there from the big boys first, and the Australian dollar. Now, bearing in mind, bigger picture here, its biggest trading partner is China. China's under the cosh a little bit, although I noticed last day or so they're starting to strengthen their currency a little bit, so maybe easing things up, which may in turn see some benefit to the Aussie dollar. You may as well just look at this chart down here. In a sense, is the asset managers 86% short at the moment, and 73% short in terms of the leveraged funds. Now the leveraged funds will be a bit more fickle than the asset managers. These move a lot slower, but you can see the picture there, pretty much negative across the board there, and you see the dealer point of view, they're getting towards, I don't know if this was starting to extreme yet. I'm just going to pull out a little bit. It's certainly, I mentioned it, is it? No, it's not extreming, so we're not getting a real extreme, but we're certainly getting some high numbers there, and at points where you do get these sort of extremes come into the market, often it's shortly afterwards, and I mean, when I say shortly, I mean within a weeks. Remember, we're looking at big time weekly charts here. It can change tact a tad, but at the moment it's still edging up there. So there's no real positive vibe sitting there. In terms of the charts themselves, well, it's been pitching up a little bit here. We've got a bit of a doji sitting there last week though, and is that a signal of something just more consolidation? The previous month it consolidated pretty much all the way through, and well, we're in a range as we're sitting here, and well, third week in, nearly fourth week in now, aren't we? So last week of the month. Is it going to pitch and break through the highs here and continue? Well, it's not convincing either way. I just think we may end up with more chop and more range. If anything, the risk if China's putting out bad numbers, etc., could be could be a felt with the Aussie dollar pushing down further. Canadian dollar's benefited from a stronger oil's been pushing up over the last week, and in fact I'm just going to pitch that up pretty quickly here in terms of looking at what's happening with oil. Bit of a pitch up here. It's running towards some resistance levels. So I've still got my old pitchfork sitting on there, or stake fork as we call it in the trading room nowadays, but it's sitting there on this daily point of view around the daily 50. It could pitch up a little bit further, run into the highs of that level, and find resistance. There's a couple of points around there, as I said on the weekly. There's the upper band, so it's not too far adrift, and I'd be watching that. Although it does look like in what was a positive trend, it does look like it might have further upside. We'll see how that goes. But if that's got further upside, generally the higher price of oil is good for Canada, and should see a stronger Canadian dollar, which would see it coming down against the US. Okay, so what's it doing weekly wise? Well, it's pitching downwards as expected in a sense. There could be rolling off further. I'm looking at this daily chart thinking that daily 200 looks encouraging. From a daily point of view, we did have put in yesterday a bullish or bearish pivot swing, in this case bullish for the Canadian dollar, but don't get me all inverted here. It's heading south at the moment, maybe towards that weekly 200. It would be a fair old point if you were trading that. Sentiment wise, I'll just come back and have a quick look at that and covered the sentiment on the Canadian dollar, and well, it's erring on the longer side just, and slightly better. Come the bigger money, the hedge funds, etc., leverage funds, there still neutral in terms of what they've done this week. They put just as many longs as shorts on almost, but their bias is still bearish overall on the Canadian dollar. But well, the price isn't really reflecting that at the moment. So for me, it's we're seeing a strong Canadian dollar, and that could continue through unless we see a marked turn in the price of oil. Okay, that's pretty much it on the markets there. I will just have a look at Bitcoin, because I do get requests to what's going on with this. Now, if you like this, do and you're looking at it on YouTube, do put a like in, and I'll make sure we cover it. I may just cover it off separately in future weeks, just to keep these things out of the way, but can't be ignored. So what's going on with the Bitcoin? Let's have a look from a weekly point of view here. And well, the bigger picture here, this is looking at the future contracts. So it's the future contracts of Bitcoin, not the cash market. So hence why it only starts more recently in 2017. But you can see it's been tapping around those lows. It's having a little bit of a bounce again at the moment from a weekly point of view, but doji, and a bit of a shove up there. It's a bit of an early one to be looking at the weeklies, but what's happened on the dailies? Well, we've seen many a day side by side here. Maybe this is a bit more of a break again. We saw last month the what may have been a dead cat bounce, but however, it was a dead cat bounce that then bounced again. traditional technical analysis, you might have been looking at this and thinking, well, okay, there's a head and shoulders sitting there, and this could be the other shoulder, and it could be selling off again. We'll see. But for now, it's quite a robust one. Trade retail on all cryptos are net long, and they think it's going to go up and up. But we'll see. For now, this is making a half decent move today. In the last 3 days, it's been pitching up a little bit there. It's broken through some rather flat moving averages. Where could it go? Well, could shove on back towards that monthly pivot there. It's got an untouched weekly pivot below that. We was looking at the analysis of this very briefly earlier on. It's the probabilities are not really built up on it enough yet to take too much notice, but it looks fairly good in terms of the weekly touches of that weekly pivot. So if it did turn around, well, and you're trading it, you're looking at it, that may be a point of target. Okay. So that's Bitcoin. Let's have a look at the S&Ps. What did I say? Don't sell in May and go away. Keep it. And what's been happening then? Let's have a look. Big picture here. Weeklies. So April, May. Hope you kept it. And I got asked the question today about it. What do I think? The S&Ps. I think they're going to keep on pushing up there. I haven't looked at the futures contracts on it from a commitment of traders, but I'll tell you what's happening from that is that my guess before I do look at it is there'll be the hedge funds will be shorting it, and the bigger traders would be long on it, and the retail traders, of course, we looked at that this morning. There's a lot of retail traders short on it as well, so the S&Ps will continue moving up on that basis. He says, well, has a reasonable chance. Okay, so let's just have a look. I haven't actually looked at the S&Ps. Let's have a look at the S&P 500 index on here, which is the one to be looking at. Let's just open that in a new tab, just in case I want to look at anything else. And what's really going on here? So, as said, leveraged funds, huge short positions here relative. They're net short. I'll just bring the picture in there so you can see the net short on the, although it might be softening out a little bit. I need to look at their short positions. Let's just have a look at positions short on here and what's happening. And leveraged money, well, it's they're increasing their short positions on there, but they may be also picking up on the some. No, it's flat on the long, so pretty neutral then in that case in terms of what's happening. Overall, actually some of the bigger money is actually easing its way out. It's interesting, the bigger money is just easing its way out of that asset manager, so maybe that's heading off to other investments. But certainly on this bigger picture is an interesting point. It peaked in January 2018, the big money in terms of net positions, and it's gradually working its way a little bit down, so maybe that's more to come. But for now, what's happened with the chart and everything else, technically it still remains bullish, and it may just put the short squeeze on the retail traders and maybe even the hedge funds there a little bit more before eventually it may have a bigger correction. Okay, that's it for me. Have a great week. I'll be back with a weekly outlook next week. Bye for now.